Hi guys, I just want to talk to you about completing a risk insurance comparison via Xplan. Now once you've logged into Xplan or YBR Xplan specifically, you need to go to the Xplan button up the top here, and once you click that, go down to Risk Researcher and then onto Premium Modelling. This should then take you into another area when you enter in life, TPD, income protection and trauma insurance to get the actual premiums of the policies as well as core features and additional features and ratings, etc. But we'll go to that a little bit later. Okay, so this is the first screen and we need to enter in the client's details in here, which the advisor should actually provide you. Okay, but we're going to use my details to start with. So enter in the name. We'll go for an occupation. Now it's very important that you get the correct occupation because this will affect obviously the comparison report. So we'll just choose this one, that's fine for the moment. You enter in the date of birth, so we can click this little icon here. We'll go the 17th. So we'll change this first, so July down to 79 and then 17. Okay, so once you click that day button, it then closes down. We go to gender, male, smoking status, well I'm a smoker, and then obviously choose the state where the client is residing. Now you need to make sure that you check the client profile or the details provided by the advisor to ensure that you do have the correct state, as they will again affect the insurance premiums or comparison report. Okay, so now we go down to cover selection. So here we've got life already showing, but generally you're going to have life with TPD, life with linked TPD or trauma. That's not so relevant, but generally life with linked TPD, and that's generally going to be held within super. So what we do here is we go, okay, life with linked TPD. Now let's have a look at these general options. Select risk product type. Okay, well we want to show pretty much ordinary and superannuation every single time. Scoring methodology, general, and the rest of this is fine. So you pretty much leave this area unless specifically asked for. Okay, so back up here, life with linked TPD, we just click plus. And then we're loaded up with the next screen and it's asking for the amounts insured, TPD definition, loadings, premium type and flexi linked. Okay, so let's just say we want $500,000 of life, we want $500,000 of TPD. Now when it's within superannuation, we generally use an any occupation. That's so that if you satisfy a insurance claim and the insurance benefits are paid out to the superannuation fund, there's a very good chance that you'll also satisfy a superannuation condition of release because you're unable to work any occupation, and therefore the superannuation benefits and insurance payout will be paid to the superannuation member. For example, if you click own, you might be able to satisfy an insurance claim. However, you may not satisfy a superannuation condition of release, which then means that the insurance payout is then locked up in superannuation. There's also a couple of other TPD definitions here, non-working or ADL TPD definitions, which just is generally for people that are maybe performing home duties, aren't working, or have some occupation that limits the amount of TPD cover that they're able to get. Now this again should be provided by the advisor, and you shouldn't need to worry about this unless specifically mentioned to you. The other one is superlinked. Now superlinked is where you actually have a portion of the TPD policy held within superannuation and then a portion held outside superannuation, but they're linked. So that means within super it would be an any occupation rating, and then outside of super it would be an own occupation rating. It just means that if they don't satisfy the any occupation rating, they'll then look at the own occupation rating and they might still get a benefit from that. Okay, loadings. Now here we want to add in loadings if, for example, the client has specific medical, known medical conditions, and you might add in, or the insurer might need to add in 25% loading, 50% loading, etc. Now the next one, premium type, we have stepped or level or hybrid. Obviously stepped is where the premiums increase, so they might start 100, 150, 200, 250 each year, whereas level premiums will start higher at say 200, but then remain at 200 over those the remaining term of the policy, only indexed to something like CPI, which is around 3%. Flexi-linked is something that you're not going to get asked a great deal, so we can leave that for the moment. Important one here is monthly premium frequency, quarterly, half yearly or yearly. This should be on the work request, so just make sure that you have ticked the correct premium frequency. Is this a multi-life policy? So is this a couple, and are they going to be getting the same insurance policy? You would usually leave this at no, but however, if it's specifically stated to you, go for the multi-life policy, click yes. You have to remember here that this program or this insurance comparison report is just to give the advisor an idea of what insurance product they should be looking at. It's not going to be exact in terms of the insurance quote, but it's just a rough idea. Now, with life insurance, you generally have some additional features that you can choose. If we look down here, future insurability, waiver of premium upon disability, accident death benefit, etc., etc. Now again, these need to be specifically noted by the advisor. Now they may actually use a different terminology, and that's where you'll need to double check which one of these to actually say yes or no to. Same with TPD options, you get double TPD, life cover buyback for TPD, etc. Let's do double TPD, let's do life buyback, and 3 years or less is fine. Now again, if there is no additional features noted in the work request to you, don't include any of these. Leave them all as no. Now, once we've done that, we go up and click Save. Now, the reason we save it is just so that we keep all the information in here, and then if something happens, we've got these details saved and we won't lose them. Now, let's add in the next one, income protection. Now, if we go down here, we have income protection agreed value, income protection indemnity value. Now, agreed value simply means that upon making a claim, there will be a predetermined or an agreed value of income the insurer has already agreed to cover. Now, with income protection indemnity, it's a little bit different. So what happens is, once you make a claim, they'll then look at your last 3 years of income and then give you an average of that 3 years. That's roughly the formula. It can be worked out other ways. Now let's go in indemnity, and we just click plus. Everything else remains the same. Okay, so now we go up here and we got the sum insured. Usually under income protection, all advisors recommend a maximum of 75% of the insured's salary. Now 75% is the maximum amount available or allowed in an income protection policy based on their base salary. However, you can actually insure 75% of the additional superannuation contributions, but that's something that again will be noted in the work request. So let's just pop $5,000 in here. There's no loadings, we're going to have step premiums, it's not flexi linked. Standard waiting periods are generally 30 days, but can be obviously higher or lower. This will all be noted. Benefit period, again, generally to age 65. You might do 2 or 5 years when you're looking at a special occupation like a miner up in say the top of Queensland, working in the coal mines, and they're actually limited to what policies are available to them. But once you actually select mining in that first screen we looked at as an occupation, there'll be these limitations will actually come through. Okay, but let's leave this at to age 65. Now again, premium frequency, we've got this outside of super, so we'll leave that as is. All of that's fine. Again, you've got additional options here. Claims indexation here is generally one that's selected quite frequently. Again, just look for the additional features. So we've done all of that. That all looks fine. We click Save. Okay, so now for the final one, which is, now we're just talking about the main 4 life insurance here. Life, TPD, income protection and trauma insurance. There are obviously other insurances, but for this example we're just looking at the standard 4. Okay, so now we go down to trauma. Now trauma is generally standalone. It doesn't go within superannuation. It is always outside of superannuation. You can link trauma with TPD, and this is just a way to have TPD and trauma outside of superannuation linked, and then try to get a discount on the overall fee of both of them, because if you make a claim on trauma or TPD, it'll reduce the other one. But for this example, we're going to use standalone trauma. Okay, so we've just ticked trauma. We just press plus. Okay, so trauma insurance, we just pop in 150,000 there. There's no loadings once again, and again we're going to go level premium type. We'll do monthly frequency. Again, double check this. We've talked about this. Then trauma reinstatement, that's quite a common one, so we'll click yes here. Waiver premium upon disability, we'll click yes again. Disability definition, own or any is fine. Now once again, these additional options, these trauma options, are only if they are noted on the work request form. Okay, so now we just click save and quote, because we've finished our entering the details, and then we come up here, and what we've got here is we've got life with link TPD, that's one report, therefore that'll be one cost to the client. Income protection, that'll be 2 report, the second report another cost to the client, and then standalone trauma, which is another report and another cost to the client. Now the only things you really need to know in here is go to general score, and you'll need to click it once, and you'll see that it comes up with lowest score down to get increasing till it gets higher and higher. So we click it again because we actually want the highest score on the top going down to the lowest score on the bottom. Now go through and do that for each tab. So income protection, general score, click once, click twice, go into trauma, click once, click twice. And what we're seeing here is under the details that I've entered, we have AIA, Priority Protection Crisis Cover, as the highest trauma insurance policy. But this is a nice little icon here that says something, rejection reasons. We'll have a look at this. This product does not contain a waiver of premium upon disability option. Now that's just something the advisor might want to be aware of. So what that's telling us is, in the additional features that we selected, we ticked waiver of premium upon disability, but we understand that although AIA is rated the highest one, they don't actually offer that feature. So if that feature is very important to the advisor and the client, then we would then go down to something like Zurich, which doesn't have any of these issues. Okay, so we've done, let's double check these, we've done that, that's the highest to lowest, we've got that highest to lowest. Then we actually go to report, and we just need to click first year. And once we've done that, we'll have a little report pop up the bottom here. So we just click on that to open it up. Okay, so what are we looking at here? So we've got a nice report. It's got all our details here. We scroll down. It's been ordered from highest to lowest, as we've said. It's got premium installments of 107, so that's because we've done monthly. Then the annualized premium. So we just save this to our desktop under the client's advisor's details and the client's details, and then we just mail that off to the advisor. So to save it, you just click on it here, go down, hover your mouse over here, this will pop up, click save, and then another screen will pop up, and then you just save it wherever you need to save it. Okay, so that's all that you need to know for insurance comparisons. Once you have saved all 3 insurance comparison reports, email each of those off to the advisor, make a note of it in the workflow that you've emailed those off, make sure that the income or cost of the reports is noted and the client and the advisor's names are noted.